Welcome to Chart of the Day. I'm Robert Folsom. Did Russia invade Ukraine cause markets to trend? See our answers for yourself. I'm going to talk about two ongoing pieces of recent news: Russia's invasion of Ukraine and the simultaneous activity in financial markets. I do not mean to imply that these topics are of equal importance. Obviously, most people pay attention to news about war and death before they pay attention to other news like financial markets. And yes, some news out of Ukraine shows courage and heroism, but alas, most of it is appalling and distressing and worse. All of that said, the one constant in financial news is this: the bigger a given news story is, the more likely you are to see headlines which link that bigger news story to financial markets. And when I say this is a constant, I trust you know what I mean. The headline says this happened and then that happened. This happened, then that happened. I could show examples like these all day, especially in recent news, but all of this is to set up what I really wish to show, which is this does not explain that. Here's what I mean. This is the RTS, or Russia's stock market, in 2022. Prices went mostly sideways in January and in the first half of February until here. The invasion began on the 24th, and the RTS tanked so hard that they halted trading on the 25th. So that creates a certain impression. Well, now let's back up the RTS to September 2021. Note that the scale of the February declines flattens prices before then, but from this October high through this January low, the RTS declined at some 34%, which is to say, this stock index was already trending lower before Russia invaded Ukraine. We can even back up the RTS all the way to 2008. What we see then is the index has never revisited this 2008 peak. And we see that since this recovery high in 2011, the RTS has moved mostly sideways to lower for a decade. If we take a quick look at the Forex market for the US dollar Russian ruble so far in 2022, the rate seems flat until mid-February when the volatility takes over. So again, that creates a certain impression. Yet, if we back up the dollar ruble to October 2021, we see something different. Noting again that this seems flat because of the February spikes, but from this late October low through this late January peak, the dollar ruble saw a 16% move in about 90 days. That's huge for a currency exchange. And it shows that the dollar ruble was already trending higher before Russia invaded Ukraine. And yes, we can back up to 2010. We see dollar ruble was trending higher years before Russia invaded Ukraine. Now, I've just shown two examples related directly to Russia, its stock market and currency. So here's a final example not directly related to Russia, namely crude oil. Yes, Russia exports around 10% of global crude, but other exporters can and will easily fill that gap. So here's crude in February and the first 2 days of March. This does create a certain impression. Now here's crude since December 2021. Crude was trending higher before Russia invaded Ukraine. And here's crude from May 2020. From then through February 2022, crude rose more than 600%. Did I say crude was trending higher before Russia invaded Ukraine? Can news accelerate a market trend in the direction it was already going? Yes, but the key part of the phrase is already going. News cannot anticipate market turns or the trends that follow big turns. For more about a subscription to our monthly Global Market Perspective, please see the information below.